Hey, what's up, guys? I'm Dr. Boyce Watkins, and welcome to the Black Financial Channel. I hope you guys are doing well, and we're going to talk about what's going on with the stock market. You've had a really great week, and but there's a lot more on the horizon that you need to be warned about. So we're going to cover that right now. Okay, so some of you are making money. A lot of you are excited about what's going on this week. I know personally, a lot of the students are doing really well in the market. I'm really happy about that. The people in the Black Business School, most of them are stock market investors. If you're not an investor yet, you definitely should get started because the stock market is the key to wealth. And I reiterate that because I want to make sure everybody knows, what the solution is. The solutions are out there. Now, with that said, I'm going to go through some things that you might want to know about. As I do this, do me a favor. Let me know if you can see me, or maybe I know you can't see me, but you can hear me. Give me a yes in the chat if you're able to hear me. Okay, and also put your hashtag B1 in the chat. We are Black First. Being Black First is very important on this platform, and so I want to make sure that we're all Black first. So give me a yes and give me a B1 hashtag B1 to let me know that you're Black first. Okay, so here's what's going on with the market right now. This has been a great week. It's been extraordinary. You can't ask for a better week than this. It's the best week since April. The market is raining money, and a lot of you are doing really well. Part of this increase in stock price, and I discussed this a little bit earlier this morning, is it relates to the fact that the markets, the stock markets, investors love balance when it comes to government. They like a balance and predictability. Balance means that you don't have a blue wave, you don't have a red wave. You have a balance. You have maybe blue and red, right? The Crips and the Bloods are working together. You have maybe a Democratic president who's being controlled or managed a little bit by a Republican Congress, or a Republican president who's being managed by Democrats in the Senate, or whatever the case may be. Well, the reason that the market improved was twofold. One, there was increased certainty about who the president was going to be. The uncertainty was a big issue. Nobody knew who the president was going to be. A contested election was going to be very bad for the market. And so as Biden got closer to winning, the market was happy about that because at least we know what we're working with. Remember, investors don't get scared of any particular scenario. It's more so about knowing where the money's at and knowing what you're working with. So with Biden in the White House, they kind of know where the money is. They kind of know what they're working with, and that's what they were happy about. Now, the other assumption that was causing the increase in the market had to do with the fact that there was balance. You were going to have a Congress that was balanced between the Democrats and Republicans. So the Senate was going to be held by the Republicans, the House of Representatives held by the Democrats, and the White House controlled by the Democrats. Okay, fine. Well, two of those two assumptions are not necessarily as accurate as we might have thought. These are two risk factors that have not been priced into the market that could put your investments in jeopardy for the short term in terms of the market value. You may want to consider, put options or something to protect against the downside. Number one, I just firmly believe we're going to have a contested election. I cannot imagine Donald Trump walking away peacefully. I think Trump is going to fight like heck, and I feel also that it was a huge mistake for him to declare victory on election night because it's almost as if he was preparing his people to go fight. That's not good for democracy, and so he's going to have lawyers and lawsuits and protests and everything else, and I think that's going to cause the presidency to kind of be in jeopardy. They're going to spend a lot of time counting votes and all that. The second assumption that doesn't work so well, that's going to cause problems, is the fact that Congress isn't decided. There was the market made the assumption that Republicans are going to maintain control of the Senate. Well, not so fast. There's some congressional races, I think two of them in Georgia, that haven't been decided yet, where they have to do recounts and runoffs. I think in Georgia, they have a law that says if you don't get the majority of the vote, you have to do a runoff against the other top candidate. So some of that may not be decided till January. So a contested Congress and a contested presidency is going to be bad for the market, most likely. That's what the expectation is. And more particularly, it's bad for growth stocks. Growth stocks are small companies that are not extremely profitable, but they're growing because they're making major investments. Well, if there's a blue wave and you increase the capital gains tax rate, then you reduce incentive for investing. all the growth stocks that are doing the heavy investing, where a lot of their high price is based on massive growth due to massive investing. Well, guess what? When taxes go up, those companies stop investing as much as they did before, which reduces their stock price. And so, basically, if there is a blue wave, you're going to see you're going to see a pricing, or you're going to see a market decline, most likely, partially due to the tax increases. So, is that the end of the world? No, I still think long-term investors are going to be fine. But what you saw recently, when the market actually dipped right before the elections, you saw a shift from growth stocks to value stocks. So now you may see a shift back to growth stocks, because there's going to be balance. But if the balance is in jeopardy, then you're going to see a shift back to value stocks. Value stocks are stocks that are much more profitable, but they aren't growing as much because they're not investing as much in their growth. Now, anyway, let me know if you can hear me. Do me a favor, hit the thumbs up button. Please hit the thumbs up, share, and subscribe button. And also, please make sure you subscribe. If you want to follow me on Instagram, there's my Instagram, the real boyce Watkins. So feel free to follow me on the gram right there. And also, I'm on Spotify, the drboycebreakdown.com. So if you want to hear my Spotify podcast, feel free to subscribe there. And you can text the word boyce to 31996 to get text notifications. There it is, text boyce to 31996. Now, I'll answer a few quick questions. Sean Richardson, pros and cons of mutual funds versus ETFs. I don't see any pros or cons. I think that there's a place for both of them. They just have different characteristics. And by the way, we talk about these things a lot in my stock market class. So feel free to join the stock market class. The first month is just $1. So feel free to do that. Let's see here. Laurenetta, hello. Joe Evans, I see you. Cliff Brand, good to see you. Lawrence Whitaker. Who's made money? Give me a yes or no if you've made money in the last few days or last couple of days. I'm going to assume everybody's made money. If you haven't made money, then then something's probably wrong in terms of how your portfolio is structured. I encourage you to make sure you're properly diversified, because if you're not diversified enough, that's the only way you could have lost money. On 18% decline in revenue, but their business is starting to pick up because the pandemic is slowing down. And well, it's not slowing down; it's slowing down the minds of consumers. They're getting more accustomed to kind of traveling, in the middle of the pandemic. And also, Uber just won a big battle out in California, where they actually were able to reclassify drivers as something other than employees that have to receive benefits. So, is that a good or a bad thing? I don't know. I'll leave it up to you to make that decision. I'm kind of mad. Virgin Atlantic lost a lot of money. They got a space flight coming up, but they just lost a bunch of money this quarter, and I'm kind of upset. I'm a big stockholder in Virgin Atlantic. I think it's a good long-term investment, but it looks like right now it's been hit pretty hard, but not too bad. The biggest stock or something in the chat to make sure you can hear me, because I'm kind of swapping files here and doing stuff on my phone. And I don't want to screw up here. In terms of Square surged by 7%. After it generated earnings of 34 cents per share, which is higher than the expectation of 16 cents per share. Roku went up 3%. They earned 9 cents per share. The analysts had projected a loss of 40 cents a share. Electronic Arts, their stock actually dropped 7.3% because they actually missed their earnings numbers, their earnings expectation, which is interesting, right? Because a lot of these stay-at-home stocks like Electronic Arts have done really well due to the fact that people are at home and they're playing more video games and things like that. Now, Gloria says I'm freezing. Was I freezing, or were you able to hear me the whole time? If you can hear me the whole time, let me know. Say I can hear you. That way I can know for sure that you can hear me. Um, let's see, T-Mobile. I like T-Mobile a lot. Last week, one of you asked me what I thought about a 5G stock, or which stocks I thought would be great 5G investments, and I mentioned T-Mobile. So I'm actually quite proud of the fact that T-Mobile went up 5% today. And so I was really happy to have invested in T-Mobile. So anyway, guys, I'm going to get on out of here. I hope that this helps you. Thank you, Cliff. I appreciate that. Thank you for the feedback. Do me a favor, hit the thumbs up button. If you haven't done it yet, please hit the thumbs up, share, and subscribe button. And also, like I said, if you want to subscribe to my Spotify podcast, you can go to the drboycebreakdown.com. It's right there on the screen. That's where you can actually hear my audio commentary. And just be warned, it's all over the place. I'm pretty honest in terms of my thinking. And also, if you want to get notifications via text, you can text the word boyce to 31996. Text boyce to 31996. And if you want to follow me on Twitter, there you go. There's a way you can follow me on Twitter too. So take care. I'm out of here. I'll keep you guys posted on what's going on in the stock market, and happy investing. And I hope you make a ton of money. I'll see you soon. Bye bye.